Today is Thursday, November 13, or wait a minute, it is November 12 actually. And this is a post-market review for the stock market activities today. We do have a lot on the agenda today. We will cover some very interesting options trades, and a lot of developments happened today in the news segment, and we do have lots of charts: the SPY, the Qs, the VIX, the dollar index, gold, TLT, TNX, Apple, and we do have new charts to cover here: Disney, Pfizer, Johnson & Johnson, and here is a new one, SPH, Suburban Propane. And I'm covering this because, as I said in a tweet today, my wife recommended for me to buy this company yesterday. Due to all the closures of restaurants, these restaurants will resort to outdoor seating, and we will see a surge of demand in propane gas tanks to heat outdoors seating. So we'll take a look at this stock and evaluate it from a technical perspective. And here we go. The Dow Industrial Average closing in the red, down 317.46 points, or a decline of 1.08%. The Nasdaq also in the red, however outperforming the rest of the indices, down only 76.84 points, or a decline of 0.65%. The S&P 500 down 35.65 points, or a decline of 1% even. Now, which sectors led the market's performance today, or lack of performance, shall we say? Every single sector closed in the red, so we're not giving any medals today. But the outperformers are consumer cyclicals, communication services, and consumer defensives. Leading the laggards of the day, energy down significantly today, followed by utilities and financials. Let's take a look at the futures market today. What happened? Crude oil declining after massive gains this week, down about 1% or so, nothing significant at all. And what do we see in softs? We see declines in coca, cotton. But here we go, OJ. Remember our friend OJ yesterday? We bought some OJ contracts. Here we go. They're up over 1%. Coffee up about 1% or so. Lumber marginally in the green. And sugar continues the rip higher. What about metals? Muted day for gold, silver, copper. Well, we see gains in platinum and palladium. Palladium got whacked yesterday. I'm still looking for an entry point in palladium. What about meats? Muted action in live cattle, feeder cattle, but we see lean hogs up about 1.77% today. Grains declines across the board, and I told you that I'm starting to get bearish on grains due to the stocking that took place the last few months. And now we're going to see supply surpassing demand, therefore trending prices of grains lower. Moving on to the big casino, the options market. Let's see which names led the day. Number 1, NEO. Continues to be a very hot trade here with 1.7 million contracts traded today. Over 70% of those were calls. Apple on number 2 with about 1.2 million contracts today, or about 60% of those were calls. Tesla back again at the top 3 performers. 474,000 contracts, about 59% of those were calls. But I'm leaving the list a little longer today because I want to show you Alibaba. Over 70% of the bids today were bullish. A lot of traders are betting on a rebound for Alibaba. We're still waiting to see if that happens or not. You also see some of the names that reported earnings today, such as Disney and Palantir Technologies, also reported after the bell. And you see the majority of the bets for Disney were bearish, and I think Disney ripped higher after the bell. And you see that the majority of the bets in PLTR are bullish, and this name is swinging between losses and gains after hours. Another interesting name here is XPEV, another electric vehicle manufacturer from China. Continues to be another hot trade, up over 30% today, and you see over 64% of the bids in options were bullish for this name. Any interesting trades today? Yes, we have plenty of them. Starting, of course, with the hot trades of NEO and Xiping Motors, or excuse me, Xiping is the president of China. I don't think this is how you pronounce it, so let me pause this video and make sure how to pronounce this company's name correctly, as I plan on visiting China next year and I don't want to get arrested right away. Alright, so the pronunciation is Xpeng, not Jiping. Xpeng and NIO. You see traders bidding on declines for these two names after the massive, monstrous gains in the last few days. Buying the 46 puts for NIO expiring tomorrow and buying the 40 puts for Xpeng expiring next week. And we continue to see upside calls for Moderna. We're waiting and anticipating the announcement of the vaccine results for Moderna. And they're buying the 95 calls expiring tomorrow. Are they going to release the results tomorrow? Who knows? Perhaps this person knows information that we don't have yet, because this is a very big bet, expecting Moderna to rise over 8% tomorrow. We'll see if that's going to work or not. Here is another bullish trade for Xpeng. They're buying the $50 calls expiring in December. So you see the picture. Short term, they're betting on a retreat in Xpeng Motors, but in the long term, they're expecting the momentum to continue. I do agree with that. I think these two names, NIO and Xpeng, and there is another one, Li Motors. If you see these names retreat significantly, it is an opportunity to buy. They will continue to rise and they will continue to be momentum plays. And by the way, where is poor Tesla in all of this action? Tesla been flat, muted, not doing anything. When will the genius Tesla holders will realize that the party is over in Tesla and the party has moved somewhere else? We see bearish bets here on Wells Fargo buying the 22 puts expiring on December 4th. And here is a trade, and I want you to pay attention now, because this is a very good educational lesson for you. When we talk about Disney options today, a viewer asked me on the comments yesterday, how do you know when you're looking at the options chain whether the trader is buying or selling options? How do you interpret the trade is what the viewer is asking. Number one, remember this. For each contract, somebody's buying, somebody else is selling. This is how trade works. If I'm buying whatever call, somebody else is selling it for me. So again, you cannot get any value from just pointing out whether somebody's buying or selling a contract. It works both ways. It is a trade. But let me show you what's going on here in Disney, and you will have more clarity on how to interpret trades. Here is what this trader is doing, and it is the same trader, by the way. Number one, they're selling the 127 puts expiring next week. Then they're also selling the 148 calls expiring next week as well. They're using some of that proceeds to buy the 146 calls expiring also next week. Extremely intelligent trade from this particular trader. And I'll explain to you right now why I interpret this trade in this way. Number one, it is based on experience. I've been watching the options market for years and years now. Number two, when you look at a certain trade, you have to go and visit the underlying stock and look at the entire options chain, and you can study from the open interest and the volume in which direction the majority of the bets are trending. Furthermore, you look at every single trade that happened for that name in the given day, and you will start to see a certain trend. And the last thing that will help you to interpret any options trade is going back to the charts and looking at the technical analysis. And in this case, the technical analysis makes the interpretation of this trade very, very clear. Let's take a look at the chart of Disney. Right away, you see the upper limit where the reversal candle for Monday took place. It comes at the price of in and around 147.5. What did the trader do? Selling the 148, betting that whatever result Disney will produce today, the stock will not likely to pop higher than 148 due to the massive resistance at that level. Furthermore, they are also selling the 127 puts, which happen to be just below the gap you see on the chart, which I am marking as the lower limit. In essence, the trader is saying that after earnings, Disney will trade in a range between 127 and 148, but it will not exceed the upper limit or the lower limit by the end of next week. Now remember, the trade is slightly bullish because they're still buying the 146 calls. And you see Disney ripping higher after hours but not reaching 148, and the likelihood is it will not reach 148 because even if it does, it will be met by extreme resistance at that level. Again, you couldn't be more intelligent in structuring an options trade than this particular Disney trade. So congratulations to whoever made this trade today. And by the way, how would I manage the trade if it was me who did it? Number one, I will take my profits on the 146 calls tomorrow, and I will use some of the proceeds to close the puts that I sold at the 127 level, which will cost me a fraction of the price I collected when I sold them, and I will leave the 148 calls to expire worthless next week. Because the likelihood is, if the market is going to be under pressure as we expect tomorrow and next week, Disney will reverse and will start trending lower. You will see lots of profit taking in Disney tomorrow because the likelihood is, with the trend of COVID, that the parks will be closed once again. And back to interesting trades. Here we go. We have another one for Tyson, and it is also a very intelligent trade. The trader here is buying the 56.5 puts and selling the 57 puts expiring next week. All in all, reducing the price of entry for this trade to about 10 cents. And all of what this trader needs is for Tyson to decline even by a little bit. And this trade will double, triple, even quadruple very quickly. Intelligent trades so far. So let's continue. Here we have trades for Qualcomm, bearish trades for the name, buying the 135 puts expiring December 4th, and also buying the same put, the 135 expiring December 11th. This could be two different trades that happen to be for the same strike price as a coincidence. You see the trade, the second from the top on the table and the other one at the bottom of the table. Another interpretation of this trade could be a calendar put, meaning that this trader is selling the 135 puts expiring December 4th and they're buying the 135 puts expiring December 11th. Either way, it is an intelligent trade one way or the other. And here is a contrarian trade for Moderna. Everybody's buying calls, expecting Moderna to pop higher, but somebody looked at the action of Pfizer, which we will cover in the charts analysis, and this particular trader is saying, wait a minute, we might see sell the news phenomena taking place here with Moderna. And they're buying the 80 puts expiring next week, and these were sold for about $5.25. You see more calls here from Moderna buying the 105 expiring tomorrow. This is an expectation of a move of 20% or more. Perhaps Moderna will come up with the vaccine news tomorrow. We saw two trades, massive bets, in this case expecting over a 20% rise in the shares tomorrow. So again, this is a wild shot of a trader who perhaps have some insider information saying, hey, Moderna will release their vaccine results tomorrow and will pop the name really, really high. Could happen, but it is doubtful. Here is another trade for CCL, Carnival Cruises. And it is a bullish bet, buying the 16.5 calls expiring in December 11th. We had bad news from Carnival Cruises, or could be Royal Caribbean. We'll make sure when we cover the headlines of the day. But regardless, it is bad news for the entire cruises industry because a COVID case was caught in one of the cruises yesterday. But again, this bet goes hand in hand with the bet of Moderna. If Moderna is going to release their vaccine trial results tomorrow, and then we're going to see Johnson & Johnson, AstraZeneca, etc. All of that could be tailwinds for a revival of the rotation back to cruises, airlines, travel names, reopening names, whatever you want to call them. And here is the last bit of trades that we have today, interesting trades. You see here is another one, somebody selling the 127 puts in Disney, expecting that to be a lower limit for the shares right now. And even if it hits 127, this particular person intends to exercise their puts and buy Disney shares at the 127 price, which happens to be a significant gap and a significant support level for the shares. More upside calls for Moderna, expecting the release to happen tomorrow. And here is a poor soul who bought 35.5 puts for Cisco expiring tomorrow. This is an earnings bet. And you see Cisco ripping higher after the earnings report, after the bell today, and these options will expire worthless. And the last bit of interesting trades that we have for you today is for Lyft, buying the 33 puts, expiring next week. And again, if we see more lockdowns, more bad news regarding COVID, this trade makes a lot of sense. Moving on to the headlines that shape the day. Today we heard from Jerome. Jerome was speaking today, and he made a mess per usual. Number one, he said that the US economy could be in for a challenging few months as COVID-19 spreads. We heard the same sentiment from President Kaplan on Monday, and my question for Jerome and Kaplan is what happened to the printer? I thought that the printer could solve all of our economic problems, but it turns out that the printer only makes the rich richer and it doesn't solve a single thing in the real economy. Continuing with Jerome, and he says that it is too soon to say how progress in the global hunt for COVID-19 vaccine would influence the US economy. And again, this is the case of the drug dealer and the drug user. The market is a cocaine addict, and when we talk about cocaine, we're talking about the Fed's liquidity and fiscal stimulus. The Fed is the drug supplier, and the irony in this kind of relationship is that the drug supplier is begging to supply drugs for free to the drug user. Jerome is pretty much saying, yeah, we have a vaccine coming, but who cares? We want to print more, and we want the government to offer more stimulus. And here is the proof. Federal Reserve Chairman Jerome Powell said the Fed will keep on doing everything it can to support the economy. Correction, not the economy, the stock market. Continuing. But said an economic stimulus package from Congress would help the economy heal faster. Can you imagine if your drug supplier was as generous as the Fed? They're not only saying, hey, we'll supply you with the cocaine, unlimited supply for free. We will do everything we can. But we will also encourage the meth dealer, aka the government stimulus, to provide you with even more drugs. This is a drug addict market and a drug addict economy. Without the supply of cocaine and meth, aka Fed liquidity and fiscal stimulus, both the market and the economy have no legs to stand on. Oh, and by the way, did you guys catch that one? Jerome Powell said the Fed has been cooperating with its counterparts around the world to address risks presented by climate change. Wow, the priorities. What is the Fed gonna do regarding climate change? I know they stopped printing paper and now they print the money digitally instead, so that should help save some trees. The problem is, last time I checked, I don't think the Fed printer can print more ozone layer for us. So what the hell is the Fed going to do to combat climate change? And don't we have bigger problems to worry about when it comes to the Fed, such as the massive wealth gap inequality that was created by the Fed's policies? Oh, and moving on to Jim Cramer, who said today, too many people on Wall Street are too positive as states reimpose COVID restrictions. Which people, Jim? Who? Does that include yourself? Because last time I checked, it was Jim Cramer saying the big tech stonks are flashing by signals. This wasn't even a week ago. So which Jim Cramer should we listen to? Is it the one who's bearish and saying that too many people are bullish on Wall Street? Or is it the one who's saying that big tech stocks are flashing by signals? Or is it the Jim Cramer who's saying bonds are becoming the risky assets? Or is it Jim Cramer who recommends buying Roku and Trade Desk 2 days ago? Or is it Jim Cramer who's pounding the table to buy Alibaba? And by the way, Alibaba declined significantly from that point on. Again, this is a split personality, the flip-flopping nature of Jim Cramer of CNBC. And by the way, we had some good news in the morning, if you can characterize it that way. The weekly jobless claims came out at 709,000 100,000 versus 740,000 that was expected. Good news if you want to compare it to the number that quote-unquote experts expected. Bad news when you look at the picture overall. We're now months departed from the start of the pandemic crisis, and we are still registering over 700,000 people every week claiming unemployment. So how is that V-shaped recovery going so far? And by the way, the budget deficit for October, one single month, is now at 284.1 billion, a record for the month, and double the budget deficit for the same month last year. And this is starting to become a massive problem. Remember, we have over $3 trillion in budget deficit this year alone. How the hell are you going to pay your way out of this one? Number one, either the Fed is going to print more and buy more treasuries so we continue to drown ourselves in debt, or they're going to have to raise taxes. So Mitch McConnell, the conservative hero, is now in a really tough spot. Either he's going to rack more debt for the nation, or he has to raise taxes on the wealthy. If I had to take a wild shot guess, I would say he would go with adding more debt, because they're all hypocrites, and when it comes to raising taxes to their donors, that's a no-go. And here is Mitch saying that he is not interested in dramatically larger stimulus. So there goes your stimulus hope, your stimulus optimism garbage that's been going on for weeks and weeks without any single result in sight. COVID. Here is a segment that we don't like to bring up, but COVID is becoming the talk of the town due to the rapid surge of cases across the nation. And I'm playing for you the data from Johns Hopkins from yesterday alone. And please pay attention to the number of fatalities yesterday alone for all of you conspiracy theorists. Okay, so we had over 1,800 people die yesterday alone from the disease. How can you be bullish when this is the picture and the challenge we're going through right now? And here we go. Here is an update. The city of Chicago goes down next. The mayor of Chicago is saying that there is a stay-at-home advisory that will go into effect on Monday, November 16, and this will last for a minimum of 30 days. So you have California in lockdown, the majority of California, at least the most important economic hubs, Los Angeles County and San Diego County. And then you do have New York, the city of New York, restrictions being imposed there. And now we do have Chicago. If Florida goes down next, and I know that the governor is a different kind of breed over there in Florida, but if we see cases rise significantly again, they will have no choice but to impose some sort of restrictions. What about Texas, which is leading the nation in the number of fatalities? But just taking LA, New York, and Chicago alone, that is a massive chunk of the US GDP, and you are shutting all of these cities down. But hey, stay bullish, because bad news is good news, and worse news is even better news, right? And here is another COVID update. Passenger aboard first Caribbean cruises since the shutdown tests positive for COVID-19. Horrible picture for the cruises industry. They assured us that they will take massive measures to prevent any cases on the ships. And here we go. This is the first time they sail a ship since the lockdowns. And what do you know? Now we're finding COVID-19 cases abroad. Again, cruises are death buffets right now. You avoid them at all and any cost. And they're not going to be out of the woods yet until the vaccine is mass produced and mass distributed. Moving on to JetBlue. And JetBlue announced today that they have plans to start filling the middle seats. Remember, they left middle seats empty because they wanted to impose some social distancing inside the planes. And today, right after we heard about the shutdowns in Chicago and the massive number of cases and fatalities yesterday, good timing from JetBlue to announce that they will start filling the middle seat. No, thank you. Don't they have a PR department over there at JetBlue? I don't know. And now, moving on to the heat map analysis. Right away, the picture is a sea of red across all sectors. Very few names managed to close in the green, but you see weakness in the tech sector. The big boxes of Microsoft, Apple muted slightly in the red, more pain for Intel down over 3%. Nvidia managed to close in the green just by a little bit. But again, you see Cisco, Qualcomm, IBM, CRM all in the red. Cisco just reported earnings after the bell, so we expect Cisco to trade in the green tomorrow, but I would be fading the pop in Cisco as well. What about communication services? We see Google, Facebook, Netflix all muted slightly to the red. Zoom gaining today, along with Peloton, DocuSign, these very hot stay-at-home names. Traders are still finding shelter in these names. Snapchat in the green significantly today due to an upgrade, I think from JP Morgan, recommending the name due to their endeavors in the VR direction. What do we see in consumer cyclicals? Pain across the board. Amazon down, Baba down. JD was up, but that was the exception. The rest of the sector is trading in the red. You see General Motors down significantly today. Lululemon, TJX, McDonald's, Starbucks, Cheesecake Factory, casinos, cruises, everything trading in the red. And the interesting thing from today is the fact that the market did not discriminate. Yesterday you saw the rotation of the rotation. Today the market is saying, everything goes down. The reopening names, the picture are getting worse and worse for them. And the picture for the momentum and growth names is also uncertain. What about consumer defensives? You see Clorox gaining today as we see the surge of COVID-19 cases across the country. What is not rising? Budweiser, Diageo, all the beer and alcohol names. Again, we were hopeful the bars will start to reopen. Forget about it. We're closing again. What about banks? What's going on with banks? We saw yields collapsing today. We will talk about the TNX in details, the charts analysis. Bank of America, JP Morgan, regional banks specifically down significantly today. And you see MasterCard, we covered the chart on MasterCard yesterday, and the name is down an additional 1.2%. PayPal reversing some of the gains yesterday, down along with American Express. Again, everything down. We're not distinguishing between stay at home and reopening, taking everything down equally. What about the healthcare sector? You see Pfizer again down over 2%. We have plenty of bag holders in Pfizer, and this is why we're going to cover the charts in the charts analysis. They popped the name higher. The moron investors started to stampede, buying Pfizer, buying short-term calls, and what do you know? The CEO and the entire management started dumping shares, and you see Pfizer reversing its gains on Monday, and from that point on, it has been nothing but pain and more pain. There will be a re-entry point for Pfizer. I'll show you that in the charts analysis. Eli Lilly, AstraZeneca all down. Johnson & Johnson, the only name that managed to close in the green. Oil, pain across the board. You see Exxon down over 3% today. No relief whatsoever. Every time Exxon pops, it lasts for one day and then you see the reversal once again. Chevron down over 2%. And now I'm thinking that I will liquidate my entire position in Chevron because the picture is not getting any better in the short term. So any pop in Chevron, and I'm saying goodbye, eating whatever losses I have in that particular name. Might buy it again, but right now the picture looks abysmal. What about industrials? Pain in Boeing, Raytheon, all the names that bounced on Monday Airlines down across the board. Very few names managed to close in the green in the industrial sector. Utilities got whacked severely today. Real estate, similar story. Pain in real estate continuing. What about basic materials? We see a reversal in copper, in FCX, Freeport McMoran, all the iron names that popped on Monday. What is gaining and closing in the green slightly? Gold miners. And before we move on, check out T-Mobile. We talked about this name as a safety trade, a safe place to park your money in, specifically after the very impressive earnings they released last week. And you see T-Mobile, a shining light in the communication services, up 1% or so today. Moving on to the rotation trade, pain across the board, with exception to the very hot names for the stay-at-home trade. The Robinhood's favorite, we're talking about Zoom, we're talking about Peloton, we're talking about DocuSign. Clorox makes sense due to the surge of COVID-19, but the rest of the names got whacked along with the reopening names. You see General Motors, yesterday we sold GM, the entire stake, and today General Motors down over 3%, Chevron down over 2%, Southwest over 3%, Royal Caribbean, no relief in sight for these travel names. And I think even if we have another vaccine headline, we realize that the journey for recovery is very, very long. Live Nation, MGM Grand, the Cheesecake Factory, been hammered severely since the beginning of the week. It had the pop on Monday, and after that it's been uppercuts, jabs, swings, hooks all over the place. And again, we go back to there is nowhere to hide. Playing the yo-yo game, switching from one sector to another, is not a good strategy. Raising cash, waiting in the sidelines that is a strategy. And unfortunately, for the new generation of investors that invaded the market recently, specifically the Robinhoodians, they don't understand that selling, taking your profits off the table, raising cash is part of an investment strategy. You don't have to be fully invested at all times, but good luck trying to convey that to them. And now let's move on to cover some charts. We have very interesting developments. Starting with the SPY 15 minutes perspective. We talked about the bear flag formation, and we're seeing the SPY trending lower and lower since that formulation. And by the way, check where the SPY decided to catch some support. The level of 352. Again, is there a coincidence here or what? No, there is not. These are the levels that we identified for weeks now, and they are working amazingly. You see the SPY bouncing from that specific level today. What is the next level of support if we continue to gap lower in the overnight session? The 345.70. And when we zoom out and take a look at the big picture from a daily perspective, here is what we see. Right away, you see that the bounce we got from short covering and dip buying is not lasting, and the SPY starting to reverse lower. The candle for Monday was a reversing candle. We said there is no ifs, buts, whatever's about it. It is a change in direction, and the direction will continue a lot lower. We have to close some of the gapping we did on our way up. And we see the MACD indicator curling downward, starting to reverse the bullish trend. Likewise, when you look at the RSI, it is curling downward, not finding any strength to continue to rise higher, meaning that the players on the sidelines are not buying all of this overnight pumping that's being done by whatever mysterious entity it is. Moving on to the Qs, 15 minutes perspective. What do we see here? Remember yesterday we identified the line of 292 as the resistance we're looking for. What do you know? Again, is it a coincidence? No, it's not. The Qs struggled to break above 292, got rejected from that level and reversed lower. And we are now in the range between the support of 285.70 and the resistance of 292. Can't make any conclusions looking at this chart alone, so let's zoom out and look at the big picture. And what do we see here? We see a bear flag formulation happening since the big reversal candle from Monday. We hit the 292 resistance. We could give it another shot tomorrow, try to break it. I doubt that the Qs will. The likelihood is we will see the downward leg of the bear flag starting to happen by tomorrow. And by the way, this could take us all the way down to the level of 274.70 to close the first gap we did from the post-election pumping mania that took place overnight. Moving on to the VIX. And what do you know? Today the VIX decided to pop again, refusing to go below the pivotal and most important point of 24.8, closing above that level and signaling that the VIX is ready to pop higher, meaning that the markets were likely to reverse. Remember, the VIX closing over 24.8, refusing to close above it, is one of 3 signals we gave in this channel to look out for the reversal in the market. And so far, the VIX has been very resilient in defending the level of 24.8 and refusing to close below it decisively. And now, moving on to the TLT. The TLT reversing higher was one of 3 conditions we gave to look out for the reversal. Number 1, the VIX reversing and recapturing the support level of 24.8. You saw that happen once again today. We saw that happen on Monday, but it did not hold. And today the VIX decided to recapture 24.8, and that is very important. But we've been waiting and waiting and waiting for the TLT to start trending higher. And what do you know? Today was the day. And here's a 15 minutes chart for the TLT, and you see the massive gap higher, and the TLT did not look behind. It continued to go higher and higher throughout the day. And I expect this move to continue to take place tomorrow and beyond. And by the way, what is going on in the TNX? Remember, TLT is not going to move without a massive move in the TNX. And today was a massive reversal day for the TNX, and we saw the 10 years treasury yields trending lower under the 90 basis points mark. Now here's the thing. Everyone, including myself, was expecting that the TNX yields will reach 1 percentage points before reversing lower. However, contrary to expectations, what did they do today? They reversed the TNX before reaching the much anticipated level of 1 percentage point. How many bag holders do you think are in this trade, betting that the TNX and yields will rise over 1%? Not just betting on the TNX itself, but buying regional banks and the XLF, etc. This was a very mean and nasty move, whoever is behind it, because we know that the mysterious entity, quote unquote, is the one controlling the movement in yields, and decided to pop it and pop it and pop it all the way to reach very close to 1%. And now we have market participants buying the pump, expecting yields to rise above 1%. What do you know? They pulled the rug and reversed before even reaching there, leaving many people holding the bag. Nasty move. And moving on to the dollar index. And the dollar index is just looping around the level of 93, turning it from support to resistance, back and forth. And the dollar, of course, post-elections lost whatever control it had over the market. And the only thing that the dollar can control right now are the prices of metals, specifically gold and copper. And speaking of gold, let's check out what's going on in the daily chart of gold. Again, the dollar rising just slightly, and you see gold declining just slightly, moving in a mirror image to the dollar index, only in opposite directions. What's going on with Apple? We see Apple, we talked about the 120 level, will act as a magnet for the name. And today it reached all the way to 120, broke it, but got rejected from it once again. This is very significant, and it is one of 3 conditions I gave you before the week even begun to look for any reversal to the downside in the market. And you see Apple getting rejected from 120. Now, we'll be open-minded. We'll give Apple another shot tomorrow, but if it reverses once again, trending lower, understand that all 3 conditions for the reversal have been met and the market is ready, more than ready, to flush down in the southern destination. And here are some interesting charts that we're covering today. Number one, Pfizer. Let's take a look at Pfizer. There is the nasty reversal for Monday. Lots and lots of bag holders. They heard the news, they stampeded to buy Pfizer, and now they're holding the bag, while the CEO, by the way, liquidated 60% of his position. So what do we do now? We eye the level where Pfizer gapped higher, and this level comes in around 36.40. Remember, lots of call buying activities happen in Pfizer on Monday. Most of them are calls expiring on Friday. So what they're gonna do is they're going to make sure that your calls are going to expire worthless this week. And what do you know? Perhaps by tomorrow or next week, Pfizer reaches the level of 36.40 and reverses higher from that point on. So if you're looking for an entry price for Pfizer, it is 36.40. However, I much rather be in this name instead, Johnson & Johnson. It is much healthier from a technical perspective, and remember, Johnson & Johnson has its own vaccine coming up. We see the level of 149 as a very strong resistance, formerly acting as support as well. And now we gapped higher. We have a lot of momentum to challenge 149, and I think Johnson & Johnson will manage to break above 149 and blast higher, perhaps to all times highs. So if you ask me, would you rather to be in Moderna or Pfizer, AstraZeneca? I'd rather be in Johnson & Johnson and Merck. And here is the last chart of the day for Suburban Propane. And here is a tweet I released saying that my wife approached me last night and she said, look, they're gonna change the color configuration in the San Diego area from red to purple, meaning that there is not gonna be any more indoor seating for restaurants. What does that mean? Restaurants will have to rely on outdoors seating. Well, the weather is getting colder, so they're gonna need more propane tanks to heat up their outdoors seating. And this trend will continue to happen not just in California, but across the country, assuming that COVID-19 cases will continue to rise. And what do you know? The name popped over 5% today, not just because the demand on propane, but also the reported earnings. And the CEO gave an interview on CNBC. Right after that interview, the name started popping higher and higher. And of course, my wife was very happy that the name and her investment thesis worked. And I bought some upside options for this name based on her recommendation. So there was a lot of I told you so happening today, but here it is. Let's take a look at it from a technical perspective. Right away, you see the level of 18.20 as the next significant resistance. And we see a bull flag formulation. And you see the massive surge of volume today, which means that the name has the momentum to break above 18.20 and ride even higher. And perhaps it is not just my wife who's seeing the trend, but other people too, and they will stampede to buy this name, creating momentum for it to rise well above the 20 level. So again, if you want to follow this trade, go ahead. And if you make profits, make sure you thank my wife. And if you lose money, don't blame me, blame her instead. And now let's move on to conclude this video. Before the week even started, we were looking for reversal conditions. I told you that the market will pop higher on Monday, Tuesday, even Wednesday, and then we will see a reversal at some point. Now, the market popped way higher than I expected on Monday, and it technically started to reverse on Monday as well. However, we're seeing the reversal becoming clearer today. We will probably see a continuation of the reversal tomorrow and next week. But the most important take here is that all three conditions have been met. Number one, TLT reversing the course and trending higher. That did happen and take place today. Number two, the VIX recapturing 24.8 and closing the week above that level. That looks like it will happen. And the third condition is Apple reaching 120, getting rejected and reversing lower. It certainly looks like that this will be the case, but let's be open-minded and give Apple all the way till tomorrow to break above 120 or shut up and reverse lower. And you will know right away that the three conditions have been met and the market will reverse. And we are not talking about, a decline of half a point here and half a point there. No. We're talking about going back and refilling some of these gaps that we have created on our way up. And we will see significant declines in some names in particular. And by the way, before I log off, since everybody accuses me of being a perma bear and negative and Debbie Downer, etc., let me give you some good news, positive, bullish news. We're approaching the holidays season, and we will start to hear about the famous Santa Claus rally optimism. Because remember, the moron gamblers and quote-unquote investors who invaded the market right after the March bottom, they invest based on stock splits and Beyonce and Michael Jordan and fill in the blank optimism, bankruptcy optimism, whatever the hell optimism, it doesn't matter. They invest on very basic and stupid principles. They don't look at the fundamentals, they don't bother. But they are a mass to be reckoned with, and they can move the market once they do the Naruto-style run and decide to stampede one way or the other. And now you're gonna start hearing more and more about the Santa Claus rally. Buy stocks because Santa Claus. But let me tell you something, I never liked Santa Claus to begin with. I mean, he's a nasty character kissing your mom under the mistletoe. What kind of person does that? I'd rather be in Team Grinch. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.